If you owe the IRS and your balance keeps growing every single month, you're not imagining it. Even if you haven't heard from the IRS recently, and even if you're making small payments, that can happen. And I see it happen every day. Today, I'm going to break down exactly why IRS debt grows so fast and the ways what you can do to slow it down, and in some cases, even reduce it. Hi, I'm Bob Jablonsky. I'm an enrolled agent and certified tax resolution specialist. I help taxpayers nationwide deal with their IRS problems, including those who owe the government and those who have multiple unfiled returns. And one of the biggest shocks I get from people who walk into my office is how quickly penalties and interest stacks up. They say, Bob, I know I owe $20,000, but why is the IRS saying I owe $40,000? Well, that's what we're going to talk about today. We're going to cover three penalties: the failure to pay penalty, the failure to file penalty, and substantial understatement penalty. In addition, we'll talk about interest, and we'll talk about how those four things on their own can cause your IRS debt to increase rapidly. So let's talk first about the failure to pay penalty. So one of the things is uh, that you should be aware of is that you are required to pay all of what you owe the IRS by April 15th. Even if you get an extension to file, it's not an extension to pay. You are required to pay the government by April 15th of that following year when you file your tax return. Um, and if you don't, what you're going to get hit with is the failure to pay penalty. That is 1/2 of 1% per month, and it's up to 25%. So it takes a while to get there. It's going to take 50 months to get that point, which is over 4 years. So it's going to be smaller than what we're going to talk to next, but the failure to file penalty, but it does keep running until the balance is paid or resolved. So for example, if you owe $50,000, you're going to see $250 per month in those penalties alone. You might be thinking, I don't even want to make a payment of $250 a month. I can't afford it, but that's what's going to be happening. So the next penalty we run into is the failure to file penalty. In this case, it's when you do not file your tax return timely. So your tax return is due on April 15th, your Form 1040. You do have an extension to file if you file it timely by April 15th, that extension until October 15th. If you don't meet the deadline based on the April or the October 15th deadline, you run into the failure to file penalty. What's that? Well, the IRS in this case is going to charge 5% a month. Remember, we said on the failure to pay penalty, it's 1/2 of 1% per month. So it's 10 times the failure to pay penalty. So you can see there that the IRS is consider it much more important that you get into compliance than you pay them. They need you to be in compliance and file your returns. And it's up to 25% of the month, the total owed. So that it gets there in 5 months. So let's go back to our example of $50,000. Well, now 5 months later, you owe $62,500. Isn't that something? I mean, that's increased rapidly, and that's why filing, even if you can't pay, is critical. You need to file even if you can't pay. So another one we're going to talk about is an accuracy penalty of 20% that may be assessed if the IRS changes your tax liability. Normally, you're going to see this through an audit or maybe a CP 2000, which is essentially a computer audit, and that's due to understatement of your tax on your original return. For individuals, a substantial understatement of tax exists if you understate your liability by 10% of the tax required to be shown on your original tax return, or $5,000, whichever is greater. So if that is the case after that audit or that review of a CP 2000, you are going to see another 20% on that amount that's being assessed. So now we get to interest, and that's something that can add up very quickly as well. The IRS interest rate changes quarterly. It's tied to the federal short-term rate. Right now, it's significantly higher than it was a few years ago as I shoot this video in 2026. It's been in recent years as high as 8%. And this interest compounds daily. So now you have failure to file penalty, failure to pay penalty. You may have an accuracy penalty for a substantial understatement of your tax liability, and you have compounding interest. And these penalties, interest is accruing not just on the taxes, but the penalties as well. So that's how the balances explode. And I've seen balances double faster than people expect. They come to me saying, this can't be right. But based on the rules of how you need to count of these penalties and interest, unfortunately, it is correct. So before we move on, if you owe the IRS and have a case you need professional help with, schedule a strategy call to discuss your case. I've left the link in the description below. So let's talk a little bit about why high balance debt grows fast and the dollar amount is even much faster. So if you are someone who owed $150,000, that late filing penalty is $37,500, and that 0.5% a month is $750 a month, and that interest is accruing on all of that amount. So you can see why that would really have an impact for large dollar amounts, where these taxpayers, it's going to completely change their lifestyle and their ability to move forward. So, and all of this is why waiting is so expensive. You need to deal with it. As with all IRS debt, you need to deal with your problem. The quicker you deal with it, the better the outcome generally. So, how do you slow IRS growth, slow down or stop the growth of this explosion in your balance? Well, there is some good news. There are some ways to stop or reduce the bleeding. So first of all, going forward, file your tax return on time. If you haven't filed it, you're looking at it today. Should I file it or not? I'm going to owe. The answer is you should file your tax return timely. Avoid the late filing penalty. Set up an installment agreement. That'll reduce your failure to pay penalty by half, from a 0.5% a month to a 0.25% a month. You might want to consider penalty abatement. There's two types of penalty abatement, FTA and reasonable cause. That might be something that will help you reduce or eliminate some of these penalties. You might want to evaluate an offer in compromise, a settlement. Most people don't qualify, but if you are one of those people who qualifies, it's a process that could wipe out your entire tax debt. And finally, make sure you take a look at your collection statute expiration date. There may be a way to navigate your debt and find a good solution through a combination of some sort of payment plan and your collection statute expiring. So if you owe the IRS, don't wait till it increases 20, 30, 50%, or even doubles. Get clarity and understand your options. In the description below, I've included a link to schedule a strategy call. If this video helped you understand how IRS penalties and interest really impact the amount you owe the government, subscribe. I post weekly content specifically for people dealing with IRS debt, and like this video so others will be able to watch it. I always welcome questions or topic suggestions in the comment section below. I read all of the comments and I answer pretty much all of them. Also, click on the video that pops up on the screen. I believe this will be a video that will help you on your journey to resolving your IRS problem.